Welcome to The Explainer. If you're tuned into the Singapore property market, there's really only one question on your mind. How do you win? And a huge part of winning is knowing when to make your move. So today, we're zeroing in on one specific year, 2026, and exploring why it might just be your golden opportunity.
Okay, let's just rip the Band-Aid off and tackle the big one right away. Is 2026 the year? Is this the right time to jump in? Well, we've dug into the expert analysis, so let's see what the data says.
And the answer, pretty much across the board, is a resounding yes. But, and this is a big but, it comes with a very specific time frame. We're talking about a prime buying window, a real strategic sweet spot that seems to be opening up right in the first quarter of 2026.
So here's how we're going to break it all down. First, we'll talk about this 2026 buying window. Then we'll get into the market outlook, what's really going on. After that, we'll flag some game-changing trends you absolutely need to watch. And we'll wrap it all up with your very own strategic property playbook.
All right, let's dive into Section 1, the 2026 buying window. What is it about this specific moment in time that makes it so special? What's creating this opportunity for buyers?
Well, you know the story of Goldilocks, right? That's what experts are calling the 2026 market. It's not too hot, and it's not too cold. It's just right. And that's a huge shift from the crazy price swings we've seen. We're moving into a much more stable, predictable environment where you can actually make smart, calculated decisions.
Okay, on to our second section, the market outlook. Let's look at the numbers shaping this landscape, because the data shows this incredible balancing act happening behind the scenes.
So check this out. Price growth is expected to be, well, pretty sensible. Most analysts are pointing to a 3 to 4% increase for private homes. That is a world away from the wild double-digit jumps of the past. This kind of controlled growth is a really healthy sign of a stable market.
And what's holding it all steady? It really comes down to these three pillars. You've got solid GDP growth, you have interest rates, SORA, that are finally stabilizing, which means borrowing costs are coming down, and there's a balanced pipeline of new homes. It's these things working together that create that market discipline.
Let's move on to Section 3, because this is where it gets really interesting. Beyond the big picture, there are a few game-changing trends, just a few key numbers that you've got to have on your radar for 2026.
First up, this massive number. Over 13,000 HDB flats are hitting their MOP in 2026. Now, just to give you some context, that's almost double the supply we saw in 2025. That is a huge wave of resale flats about to enter the market.
And what does that wave mean for you? Well, if you're a seller, it means more competition. Simple as that. But if you're a buyer, especially an HDB upgrader looking for your next home, this is fantastic news. It means more choice and, crucially, more power when you're at the negotiating table.
Okay, trend number 2. A new price benchmark is coming. Analysts are predicting that the new launches, the brand spanking new condos, are going to start hitting the $3,000 per square foot mark later in 2026.
Now, here's the real kicker. When that new price ceiling gets set, it creates this fascinating opportunity. All of a sudden, every property launched before that benchmark is going to look like a bargain. It makes them seem strategically undervalued, and that's a huge opening for savvy buyers in early 2026.
So this brings us to the most important part. How do you take all this information and actually turn it into a winning strategy? This is your playbook.
Let's kick things off by busting a huge myth. I'm sure you've heard it, maybe at a coffee shop, maybe from a relative. That little voice that says, just wait, don't buy now, a big crash is coming.
But here's the thing, the analysis and all the hard data just don't back that up. With Singapore's strong employment numbers and steady income growth, a major crash is really unlikely. So, waiting for a crash that probably isn't coming, well, that's not a strategy, it's a good way to get left behind. Now, for buyers around that $1.5 million mark, the whole game is changing. The old advice was to grab a small, new 1 or 2 bedroom unit, but the problem is, those are getting tough to sell later on. The new playbook for 2026? Go for an older resale 3 or even 4 bedroom unit. Why? Because your exit strategy is built right in. You're targeting the biggest group of future buyers out there, HDB upgraders.
And for you investors out there, the real win is in thinking ahead. We're talking about the MRT effect. The biggest returns, that 6-figure upside people talk about, aren't made when the MRT station is already open. They're made when you buy in before it's even built, when it's still just a plan on a map. You're buying the future.
And if you want the ultimate cheat sheet for long-term value, look no further than the government's own URA master plan. It's basically a treasure map showing you exactly where the next big growth areas will be. Places like the Greater Southern Waterfront, with massive new projects like the Burleigh Estate, that's where you find that first mover advantage.
So when you boil it all down, the takeaway is pretty clear. 2026 isn't a market for speculators just hoping to get lucky. It's a market that's going to reward the prepared. Success is going to belong to the buyers who really understand this new playing field and are ready to act strategically.
So we'll leave you with this final thought to chew on. In a stable market that rewards a 10 to 15-year horizon, the question isn't just when to buy, it's about looking at that map and deciding where you want to be in the next decade and beyond. Where will your strategic move take you?